Everyone, Professor MoneyPigTrading, September 18, 2022. We're going to take a look at S&P 500 or SPY, dropped 5.7% this week due to inflation. Will it keep dropping? And also, semiconductor sector has been leading the S&P 500 to drop. So will it continue to drop? So let's take a look. So first of all, the last Tuesday, the CPI, Consumer Price Index inflation numbers fall into expectation. The number was 8.3%, while the Wall Street was expecting 8.1%. And everybody was expecting the range of 8.0 to 8.3%. So a lot of people are reaching out on social media, like why the inflation number is in line, but the stock market dropped so much. It's pretty much because the core CPI number continued to rise. Let's take a look. So the first key component of the core CPI number is actually the used car index, and it actually has been dropping, as you can see the line here. In the past few months, it started to break this uptrend, so continue to drop, which is a good news. And based on our forecasting, we believe this used cars index will drop back down to the January 2021 level some point in Q1 or Q2 next year, based on the current speed. So that's a great news for the inflation to cool down. However, let's take a look at what are other components that's making this core CPI number to rise in the past week of CPI data. So we talk about the used cars. However, the new vehicles is really, really bad. The inventory is so low that it's actually even lower than 2021. Current inventory level for new vehicles is 50% of the 2021 level. The other key component for the core inflation continue to rise in August is the rent. The rent in the West Coast and East Coast still pretty elevated, and we do expect continue the rate hike will make the real estate price continue to drop, especially like, for example, Bay Area. A lot of companies start to slow down hiring or even cutting down their jobs. In that case, people will stop moving into the Bay, right? And we'll probably see the following earning report from developers like Toll Brother. The inventory number continuing to rise as well. So demand drop, supply will continue to increase at the meantime, because a lot of developer projects will continue to be finished until the end of Q4 this year or Q1 next year, before they slow down the construction projects. So basically what we're seeing is the rent will hopefully early next year will start to slowly dropping. The other key components actually contribute to a lot of this core CPI rise is the airline fare. If you guys ever fly in the summer, you'll probably notice, for example, from San Francisco to New York back to July, the flight ticket cost was ridiculous. It was about 1,000 to 1,100. Usually normal July, we're probably looking at, even, the summer vacation started, we're probably looking at 400 or 500 bucks, right? Like this double the price or even higher is just insane. And this airline fare rise so much that actually just boosts up the core CPI way more than we expected. So yeah, the next key components that we have to see in the following CPI number are just these items that we discussed. However, saying so much, just want to introduce our partner Piggy Cards. We know that inflation is so bad, but they actually offer a lot of great discount on 400 plus of brands of gift cards. So for example, we talk about traveling, so they have Southwest, Airbnb, all 3 to 4% discount. They have pretty big discount on a lot of like outdoor activity items at LL Bean and REI. It's all 7%. So if you're interested in their website, feel free to sign up with our referral link down below. You'll get a $100 sign up bonus. Help you save more in this crazy inflation period of time period. So let's take a look at SPY. So basically on Tuesday, when the CPI number come out in the pre-market, SPY actually dropped about 14 points in a matter of 15 minutes. That's really, really deep drop and very fast. And we can see last week we were talking about this SPY and social media that actually trying to break this daily downtrend, because everybody was expecting the inflation to cool down. So a lot of people sort of buy into the market, into this CPI number. However, the CPI just punched those balls on the face. And basically what happened is that day we just had a huge gap down of the SPY, and making all the colorful line, which is the daily EMA, they start to merge. And once they start to merge, especially the 4-day EMA and 8-day EMA, we call it 4-8-day EMA cross, that's a typical sign of the market is going to start to pull back. and indeed pulled back. And Wednesday and Thursday, just 2 days of choppiness. And at the end of Thursday, markets started to break the range, and we know on Friday it's going to be a slaughter, and indeed gap down and break the range low 382. So let's take a look what happened. So after the CPI number Thursday, we talk about it. The market actually have a next leg down. Is because AMD actually said the PC market started to slow down. So Microsoft MSFT actually dropped quite a bit, 3% that day. So other PC related stock like Adobe, Micron, they also drop as well. Why AMD and the PC market is so important? So it's actually not a news. So when Micron reported earnings about 2.5 months ago and Intel reported about 2 months ago, they all mentioned that the personal computer or PC market has been slowing down. So that actually is going to affect a lot of US companies' earnings, right? Micron actually produced the DRAM or the RAM inside the PC personal computers. Microsoft Windows heavily rely on those PC sales so they can sell more operating system. So once the PC market slowed down, it's going to affect all those companies' revenues and therefore their stock market, the stock price. And one thing we have to mention about semiconductor is the situation is actually getting really bad right now in this particular sector. And this sector is so important for NASDAQ and hence S&P 500. So let's take a look at an example, right? SMH daily chart, which is the semiconductor ETF. We can see right now they're about 6% away from the year low 189.94, so pretty much 190. Right now, all the EMA started cross, trying to continue this downtrend. We do expect on the chart it will continue to break down. And fundamentally, it makes a lot of sense because during all the earning report, AMD, Intel, NVIDIA, they all reported that the inventory increased, the PC market slowed down, their demand dropped as well. On the lower left corner, we look at DXI. This is the DRAM price index. DRAM is the dynamic RAM inside our computer being used these days. And basically, the red line is the price of the DRAM. You can see the DRAM price starting this year from January, just all the way down and down. There was a little bit of bounce back to about early June into the summer, and then continue to drop. And right now is hitting another resistance, so it's kind of flat right now. And we can see on the right side is the Micron, which is the major US DRAM producer. And the stock price has been hammered as well throughout the year. The year high was, if I recall correctly, is around $80 or $90 and continue to drop right now to 52. It's pretty much hanging above the year low at 51.4. We do expect Micron September 29 earnings going to potentially continue to lower their guidance and provide a pessimistic outlook. If that happened, worst case scenario, we're expecting at the end before year end. Worst case, Micron's going to drop down to $41. We do expect Micron to trade it between 51 to 41 at some point in Q3 or Q4. So we just have to see how their earnings goes. However, not only Micron, Taiwan Semi has earnings October 21st, and then Texas Instruments and all the other semiconductor will start to report their earnings into the end of October and early November. So we do expect a lot of worse financial outlooks across these companies and potentially can bring down NASDAQ quite a bit since this sector is so important and fundamental for all the 3C products. The other thing, back to the SPY. So SPY on the Thursday session dropped on the AMD news. And not only that, if you watch the market after market hour on Thursday last week, actually SPY continued to drop. What happened is FedEx actually withdrawn the 2023 guidance, saying that they're being heavily affected by the inflation. So we see SPY on the daily chart on the left actually had a huge gap down into Friday opening. And not only FedEx withdrawn the 2023 guidance, General Electric, which is another very important and big industrial name on top of FedEx, they also lowered the guidance on Thursday after the market hours. So this together just tanks SPY so much, and because they're so big, top company in the S&P 500, and that's why that affect markets so much. And imagine if the transportation looks so bad, that means a lot of companies reduce shipping. Their buying activity probably slowed down. That could affect retailers, and that's why we're seeing the consumer staple market, and a lot of Costco, Walmart on Friday, they all gap down and continue to drop. And at the end of the day, SPY actually, because of the rebalancing, we actually see a little bounce, and we do expect this bounce. So on the day trading, our team actually successfully initiated forward more than 100% lotto in the final hour of the trading hours. So we're doing pretty good using the nature of the mechanism of the market. However, on the daily chart, we're still seeing this downtrend continue, and we have a lot of pessimistic news. However, there's actually a slightly positive news is on the Federal Reserve SOMA balance, for their balance sheet, which is in the red line. Right now, we're still hanging about $8.3 trillion, 8.2. The black line is the S&P 500 ETF SPY's price. Axis is the date. So currently, the Federal Reserve did not drop the balance sheet quite a bit and faster than what they promised. We believe it's because they're raising the interest rate so high. And on the other hand, they don't want to reduce the balance sheet so fast. So that could drop the liquidity a lot and affect the stock market and other financial markets like bond market. And so that's why we still have a lot of liquidity in the market and supports SPY relatively well at the current price level. We do expect in the September FOMC, they promised they're going to speed up this balance sheet reduction. If happen, we might see faster dropping on SPY. So we'll have to see carefully this Wednesday what Fed said and what they act on Thursday, every Thursday number about this balance sheet reduction. So our current projection that we post on social media is S&P 500 or SPY is going to trade it between 389 range low over here and 362 year low at the end of September. And what happened on Friday actually just fall into our prediction zone. What will happen next week is right now the trend is continued to the downside. However, regardless of the technical chart, what Fed said on Wednesday on their Fed interest rate decision will be the key. If they say, you know what, we're going to stop raising the interest rate for whatever reason, the market will rally into the sky and vice versa. So what they said will drive the market this coming week. Currently, FOMC rate decisions on September 21st on Wednesday. We do, and the market are all expecting a 0.75% rate hike because the inflation is kind of bad. However, the key is in the FAQ, what will Powell said about his outlook and his thought about November and December FOMC. He will probably continue what he said. If the data suggests inflation is still bad, they continue to raise rate aggressively, that might continue to tank the market. If he said, well, I think inflation will start to ease, we probably might slow down the inflation in a rate hike. I don't know, Q1, Q2 next year, market will rally. The key thing to watch is his hint, his attitude, his tone. And we do think if the inflation continue to be bad, there's a very high chance they will continue to raise the interest rate 0.5, 0.75% in the November and December FOMC. If that happens, we could see S&P 500, NASDAQ, US stock market, crypto market continue to drop into the year end. So that's definitely the key thing that will drive the market next week. So if you like our content, make sure to like our video, and also feel free to check our Discord community at www.moneypigtrading.com. Also have a Twitter, YouTube, Instagram, Facebook group, or MoneyPigTrading. Thanks for watching. I'll see you guys in the next video. Bye bye.